Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage, from Nitin Gadkari to Arvind Panagaria and Montek Singh Ahluwalia, visionaries who are shaping India's future, all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook: finance, roads, reforms, disinvestment. Nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
Good morning, ladies and gentlemen. A very warm welcome to you on Business Today Television, and of course in our special show Superstar Funds, where we bring to your attention quality assets that have not only outperformed in the longer term but are also doing extremely well during the short term, despite whatever problems that we may be facing in the markets. Because we are in the beginning of August, the first 7 months of 2022, the first 7 months of calendar 2025 have lapsed, and winners are there on the fore as far as the performance of year to date is concerned. I'll first request the PCR to kindly fire the long-term chart of the Nifty, in which you will see that the index has appreciated just 4% in the past 7 months or so, 3.89% to be exact. This is the benchmark that we are now going to try and beat. Now that data is out, we'll look at funds, especially in the wealth builder category, in the flexi cap category, which have outperformed not only their own market but also the broader markets as well. So, ladies and gentlemen, the top performer in the wealth builder category of funds so far in calendar 2025 is ICICI Pru Focused Equity Fund. This is a scheme that was launched in May of 2009, therefore 16 years have lapsed. Not only is the fund in the upper quartile of outperformers in the longer term period, say 5 years, 7 years, 8 years, 10 years, it has handsomely outperformed the Nifty in the year to date period. ICICI Pru Focused Equity has delivered a return of 7.2% in the past 7 months, almost more than double the one that Nifty has delivered, and also outperformed its own peer group as well as NSE 500, the broader index. If you look at the periods of 5, 7, 10 years, it has always been in the upper quartile. Therefore, pointing to a longer term outperformance track record. Now, what is ICICI Pru focused equity fund made of? Well, as the name suggests, it's a focused holding of just 33 stocks, mostly from the Nifty. The net asset value of ICICI Pru focused equity fund for the direct route is 103 rupees 52 paisa, and the assets under management of this scheme is somewhere in the vicinity of 12,244 crore rupees. If you look at the regular route, the fund has given a CAGR return, a compounded return of 14.6% a year in the last 16 years. That essentially means that if you started with a SIP of 10,000 rupees each month in the last 16 years or so, you would have given somewhere like 19,20,000 rupees, and that amount today stands at, ladies and gentlemen, a strong 74.2 lakh rupees. So the money has almost gone up by about 3.5 times in a span of 16 years. And more importantly, this is not something that you handed out immediately or at one go. This is spread over many months, in fact 180 months if you see, to be precise, and that is the amount it has grown up to. Returns as far as the direct route is concerned are even better. If you see the CAGR performance over the last 12 years, remember the direct route was opened for investment in January of 2013. So in a span of about 12 years, the CAGR return for ICICI Pru focused equity fund is somewhere in the vicinity of 18%. So that's the reason why you should be choosing the direct route, and this is a sum of 14.4 lakh rupees that you have given a period of 12 years, that's 10,000 rupees a month, and that amount is now at 46 lakhs. So this is, ladies and gentlemen, how you make supernormal return by doing the least amount of work but remaining invested in times of pain, in times of volatility, in times of downturn. That is when the fund NAVs are purchased at their best price, and that's the reason why you make supernormal money. On a 10-year period, ICICI Pru focused equity has given an annualized return of 16%. It has outperformed the flexi cap category as also the BSE 500 index, ranked 4th in 10 years, 4th in 7 years, 3rd, 6th in 3 years, and of course 2nd in 6 months, and 1st in the year to date period. So that's the performance, whether it's short term or long term, it's consistent and it's wonderful. Now let's look at the portfolio. If you look at how this money has been invested, 33 funds, 33 stocks are generally from the super large cap space, which is the mega caps in the market, and you've seen stellar returns coming in from them, pointing out to the flexibility that the fund manager enjoys. ICICI, Axis and HDFC Banks are the top 3 holdings as far as the fund is concerned, and of course a little later you see all the nifty companies right there in front of you. There is Infosys, there is Pharma, there is Bharti Airtel, L&T, Ultratech Cement and Pidilite. I'd like to point out one interesting point. Over the last several months, when you see the portfolio, ICICI Pru focused equity has bought the pain in both Infosys and Pharma, and that, ladies and gentlemen, is the flexibility that I point out. The fund manager specializes in buying pain. We all know how badly Infosys is performing. We all know the phases that Pharma is going through. Both these stocks have corrected sharply, but the fund manager has very smartly used this opportunity to buy and improve its holding in Infosys as well as Pharma. Now financials, as it's pretty clear, are the heaviest weighted sector as far as the fund is concerned. Technology is the second heavy weighted, and of course you have industrials and healthcare as well. Top 10 stocks account for about 47% of the AUM, which is 12,000 crores. So that essentially means that somewhere like 5,640 crores is invested in top 10 stocks. Top 5 stocks account for about 28% of the portfolio. If you look at how the portfolio is weighed, well, the price to book of this portfolio is somewhere like 4.42, and of course the PE ratio is fairly okay, about 29.7. So this, ladies and gentlemen, is the end result of the 7 months that have lapsed so far, and the funds returns have been substantial. It's not as if that it did not have a bad period. The worst year for ICICI Pru focused equity was between March 2019 to March 2020, when it lost somewhere like 29% of its net asset value. But the best year has been subsequent, 2020 March to 2021 March, when the fund appreciated 93%. So quality schemes, ladies and gentlemen, have this wonderful output always, that when they fall in a particular quarter, particular month, or a particular year, their fall is lesser than what their eventual rise will be. Just as you can see that the worst year has been a drop of 24%, but the best year has been a rise of about 94%, and this is repeated in the quarterly as well as the format. So the worst quarter has been a drop of 28%, but the best quarter has been a rise of 38%. So fund managers are able to predict in a better fashion the ups and downs of the market. The volatility is what they address in a much better fashion than retail investors, and that, ladies and gentlemen, is the reason why you should have these quality funds in your portfolio, because not only do they navigate volatility, bull markets and bear markets better, they know when to buy and when to book profit. The same Nifty stocks have done pretty much nothing in the index, but an actively managed fund of the same stocks has outperformed not only the index, it has given 2x returns than the index in the last 7 months or so. It has also been a consistent outperformer over the longer periods. With that, ladies and gentlemen, that was the review that we had in Superstar Funds today, ICICI Pru Focused Equity Fund. I hope you liked the presentation. Thank you for your time.
Not all numbers are born for the balance sheet. Some are born to bring a smile. Some usher the future. Some make you stand tall. Some numbers light a fire and fulfill wishes. Some spoil you silly. Some echo joyful shrieks. Some numbers have smiles written all over them. Some make the planet happy. Some make the planet healthy. Some numbers rise against all odds. Some are made for dreams. Not all numbers are born for the balance sheet. As we spread our wings globally, we at Mahindra believe that the numbers we are most proud of are the number of lives we have touched. Mahindra, together we rise.
India's economic architects, together on one powerful stage. From Nifty and BSE to Bhatnagar and Montexing Ahluwalia. Visionaries who are shaping India's future. all debating the Viksit Bharat roadmap, where legacy meets leadership. Here, the real policy playbook, finance, roads, reforms, disinvestment, nothing is off the table. The inside views, uncensored. Only at Adani Business Today, India at 100, 8th August 2025, Shangri-La Eros, New Delhi.
Caught in the crossfire, a convoy of UN vehicles approaches a crowd of starving Palestinians near the Kerem Shalom crossing in Gaza.